Good evening and welcome all to this special webinar on market profile. Before I let this space to Sanjeev Guar, I would like to thank him for agreeing to do this webinar for us. Sanjeev is a founder of GUI Trading, a professional trader and a psychology coach. He is an alumni of IIT Bombay and has worked with Optivia, one of the leading market making firms. Apart from that, he has worked with Futures First, a prominent player in the proprietary trading with large presence in India, trading bonds and fixed income derivatives, as well as his work with Oak Capital, another commodity and bond trading firm. He uses price action, market profile, volume profiles in order to identify the trades. He has recently started a YouTube channel and started posting some valuable content. I request you to search for GUI Trading on YouTube and subscribe to his channel to get regular updates of his content. The format of this webinar is going to be about 90 minutes, wherein Sanjeev will talk and provide his inputs on market profile. And thereafter, we will have a question answer session for 15 minutes. I would request you to ask your questions on the Q&A section, and we will take up some of the questions in the end. Over to you, Sanjeev. You can now share your screen. I will stop sharing.
Please type yes in the comment or in the chat box if you can see my screen and hear me. Cool. Thank you very much. So first thing first, thank you, Roshan, for such a warm welcome, and I cannot appreciate it enough. So from the bottom of my heart, thank you very much. And another big gratitude to you again, Roshan, for shout out to my YouTube channel. All of you are welcome to subscribe. I'll try my level best to produce quality content in order to serve you better. Now, before I proceed, first, I want to acknowledge and congratulate and thank each one of you here, all 109 people who took their sweet time out of their busy weekend or busy weekday, you can say. And after trading, after getting exhausted mentally, physically, they took their time to come here to be present. And I believe everything in this universe happens for a particular reason. There is always a collision. So this webinar and all of you 112 people here were meant to be. So with that note, let's take off. So first thing first, why we need market profile, why we need to study market profile. There is already price action, there is smart money concepts, there is Dow theory, there is Elliott waves, and then there is GAN concept, there is the supply and demand. There are so many things already available. There are tons of millions of indicators and there are combinations for different type of market environment. Why we need another concept? And that too introduced in 1985, in such a late time. So why this? And is it beneficial for us? And if it is, then what is it about? And how it helps us to gain our edge over other participants? Because the trading, if you were to ask me, is all about gaining advantage over others, no matter what you do. So let's see, let's delve further. So it leads to answer, it gives me the opportunity to answer why market profile. First, it is beneficial for all the traders. It is applicable in all type of markets. When I say all the traders, it means for intraday traders, positional traders, swing traders, part-time traders, long-term traders, everyone can use market profile. Though originally market profile was created for intraday charting only, but it was created something like 40 years back. Roughly 40 years back. So with the advancement in technology, in understanding and information, and yes, with the help of internet, many people poured in, and it graduated from just being an intraday tool. So it can be used for all type of traders. It can be applied in trending markets, non-trending markets. It gives us a good entry. So those of you who are fan of finding crisp, precise entries, they can definitely use this. And market profile, from my perspective, I started using this just to understand the smart money better, just to understand how those big players are manipulating the markets, why they are buying, why they are selling at a particular level, why they do stop loss hunting, why they create failure attempt or failure auction, lot of things. Basically, I just wanted to delve deep into market profile to understand what big money is doing and why it is doing so. Simple. And in my experience so far, it has given me a definite advantage in market understanding. So I'm really glad to present things here to all of you guys. And this thing is expansionary results. Let me show you. I don't mind showing you my screen. Just give me a moment. I'll be really quick. Okay. Generally, what happens with any concept that you have learned or you will learn, the growth and basically learning, if we plot x-axis on the learning on the x-axis and profitability or growth on y-axis. So this is what typically happens. In the beginning, you learn a few things and you grow exponentially. You grow at a very rapid rate and you feel like you have gained something really advantageous. Could be a moving average crossover or RSI or some new setting of RSI or some super trend or downchain channel or Bollinger Band or some advanced price action or something like that. So when you take baby steps, initially you grow exponentially and you get really excited. Then after a while, your growth starts to diminish. And this is what some people call law of diminishing return. Whereas with the understanding of market profile, if I were to plot learning, I hope you are able to understand these kiddish scribblings of mouse writing. I'll be reading everything. So even if you don't understand it, you'll be fine. Okay, so now in context of market profile, learning curve is really disappointing in the beginning. There is a bit of learning curve is involved, but good news is it goes like this. And it looks so beautiful that I think only computer can draw a graph like this. Just kidding. So here what happens, in the beginning, you gain nothing. You feel like, man, come on, I could have learned a good indicator or something like that. Good concept. My friends, they have started to learn so many new things. I'm not getting anywhere. After another 1.5 months, you feel like, okay, now you know few things. Now you know few things your friends don't know. After another 1 month, now your results, your understanding is visible. And with your understanding, you are able to not just decode the market, not just understand the market, not just follow the smart money, not just follow the big orders. You are able to produce tradable, profitable trades. And those trades are something that you never thought of taking in before. For example, in some cases, so for some of my students, they scalped for 3.5 years. In some cases, 3 years. In some cases, they were trading for 10, 12 years. And they could not capture more than 15, 20 points in Bank Nifty. After understanding and supported understanding, their profit became 5x. They started to capture 100 points intraday in Bank Nifty option premium. So that's the kind of growth I'm talking about. You spend another 1 month, dedicated another 1 month. Now you are above the rest. All the people you know personally who started trading with you, you have surpassed them. You spend another 1.5 months. Now you are competing at the national level. And if you spend another 1.5 months, You go beyond national level, and probably you're knocking doors on the international level. You are ready to compete at international events, and not just compete there, leave your mark there. That's the kind of growth I'm betting upon, and that's the kind of growth market profile promises. So are you excited? Those of you who are excited, type excited in the chat box. Interesting. Very good. That's why you are a wonderful crowd. Those of you who took sweet time on Wednesday, today, after their office hours to come here, they are wonderful people. Okay. So now that you know that market profile is definitely a very, very good tool. And I won't say it a good tool. Okay. I'll let you explore what type of tool it is. But just bet on the growth that you are going to surpass anyone, and not in a period of decades, very fairly quickly, depending on the effort you put. So what is a market profile? So let's not go very far. I have taken a direct definition from Wikipedia itself. And if you search for market profile Wikipedia, these are the lines you will get. So it's an intraday charting technique or tool, which was devised in 1985, and in which price is on vertical axis and time or activity is on the horizontal axis. And the concept was to display price on vertical axis against the time horizontal something. So if I open this eye soothing application rather, not just app, not just mobile app. When I saw those colorful bricks, I subscribed to it immediately. Okay, so these letters, I don't know what they mean, but they mean something because they represent the activity of market participants in Bank Nifty of 7th December, and today. So these letters mean something. On the vertical y-axis, you are seeing that letters are stacked on top of each other. They are representing a price range. And then ABCD, they mean something. And that something is simple. A period means first 30 minutes. That means 9:15 to 9:45. B period means next 30 minutes. That is 9:45 to 10:15. C period means next 30 minutes, 10:15 to 10:45. Now you get it. So the next 30, next 30, next 30, next 30, and so on. And lastly, last 15 minutes are this M period. So they are represented just like, the candles. They once, let's say, if you talk about 5-minute candle, once 5 minutes are passed, next candle is formed. After another 5 minutes, next candle is formed, like that. So here, first candle is for 30 minutes, then another 30 minutes, another 30 minutes, and so on. Our market has exactly 375 minutes. So last 15 minutes are left. So last 15 minutes are covered in this M period. So that's how this market profile chart looks. Just treat them as candles, and the body of the candle, or rather range of the candle, is replaced by the letters. As simple as that. Okay, so it was you can say, new method to chart intraday activity, which was invented, you can say, in 1985. Now, after we understand that it's a different type of charting, it's nothing like candlesticks, it's nothing like line chart or Renko chart or Heikin-Ashi, something like that. It is the market activity, it is represented in letters. Now, in order to understand further, we need to understand few things, and what are generally used by market profile traders. And jargon is just bunch of different sounding words used by smart people so that they will appear smart. Nothing else. That's the classic definition of it. So jargon is just nothing, some common keywords that are used by market profile traders. Nothing special about them. So for the time being, ignore this initial balance. There is value area, there is a range. Range is same as the day range or the candle range from low to high. So nothing special here. Then there is a point of control, there is a tail, and these 5, there are many others, but I don't want to overwhelm you guys. So we'll take it slow, we'll take it easy. So let me ignore initial balance. Range, I hope you will understand. Point of control, let me start by point of control because it is the easiest thing to spot on the market profile chart. Okay. First, this, as you see, these individual candles, these are in split form. If you click on it, if you click away, and if you click on it again, you see here in small letters, very small letters, by the help of a microscope, you can see it. On your screen, you will be able to see it, that it's a split chart. When candles are split in a 30-minute period, each candle is split. I'm just kidding about microscopic part. And if you merge them, so the every candle shifts to the left. And as you see, there is nothing below a period. All these 1, 2, 3, 4, 5, 6, 7, these 7 Ds, they will come below a period and so on. See, this is the A level where market opened. 1, 2, 3, 4, 5, 6, 7 Ds came. And similarly, same thing happens to the next, all the periods. All right. Okay, there's a question. What's the difference between volume profile and market profile? Okay, let me answer this, but for the flow's sake, I want to request all of you that please hold on to your questions for the end of the session. So volume profile denotes at a particular price how much of volume has been transacted using market orders. Market profile denotes at a particular price how much time market spent at that particular level. So the difference will be at a particular price, let's say this 43,333, at this price, how much volume got transacted will be denoted by volume profile, and how much time market spent at this particular level will be denoted by the market profile. That's the difference. All right. Now you see in this colorful chart, this white line. This white line is called point of control. This is the price where all the market participants fought maximum. And this is the point where all the market participants try to take control. So wherever you find this maximum stacked letters, you will find point of control. Sometimes it happens that you will find 2 of them. In that case, closest to the center, or you can say the value area, which I'll explain shortly. So the series of letters, the longest line, which is in the right between the, or right in the middle of value area, that becomes the point of control. You don't need to bother so much with the technicalities. This platform tells you the value area right away. It will mark it white, and this ray will get extended. So it will be extended till infinity. So no brainer there, easy to understand. So point of control is clear. Range is simple, from low to high. Then value area. Let me show you value area also. If you right click on the platform, go to settings. Here is a setting which is called, which says show value area. And if I do that, see, if I unclick it, look at this profile. Everything is bright and clear. When I click it, only limited portion of the profile is visible, not visible. It's limited portion is brightened. Rest gets faded away. So this brightened area is the value area. This is where 70% or 1 standard deviation or 2/3 of the market activity has taken place. There are 3 definitions that are used. One definition is 1 standard deviation. So 1 standard deviation from this normal distribution of bell curve. So those of you who are from statistical background, they know what they're talking about. In some text, 2/3 of range is written. That means something like 67% roughly. And in some text, 70% is written. And this is also roughly 68%. So if you focus 68%, 67%, 70%, these three values are so close, it's not even worth arguing which one is correct. So we'll take any of them. If the difference was 60, 70, 80, then we would have thought that, okay, who is correct? Otherwise, it simply doesn't matter. So the definitions don't matter. So all the activity that has taken place in that day, 70% of that, or 2/3 of that, or one standard deviation of that is highlighted, and that becomes the value area. And when you enable the value area high and value area low is visible in this green dotted lines, very thin lines, but these are clearly visible. So high of value area becomes value area high, low of value area becomes value area low. No brainer there. White line is POC. Day high is the high of the range, day low is the low of the range. Okay. Now what are the tails? So tails are these single boxes. Single boxes. These boxes are called TPO. T for time, P for price, O for opportunity. I have absolutely no idea why they labeled it like this. Probably they wanted to sound smart, to make them understand and make the people understand that they are creating something new, something really, really fancy. Otherwise, I have no idea why they call it TPO. So the simple boxes or TPO. So when you see these two single TPOs or single boxes at the day high or day low, it is called tail. That's the definition. Minimum 2. More than 2 are also allowed. So when you find minimum two such boxes stacked, single boxes stacked on top of each other, either at day low or day high, that becomes a tail. So since here it is at the day low, someone bought here, that means that denotes buying tail. Here, this also is a tail, and again, it is a buying tail. Here, this is a selling tail. Another selling tail. Actually, it's not a selling tail exactly because this is the last TPO, but let's not go into technicalities right now. This 4 letters, single boxes stacked on top of each other, again, selling tail, buying tail, selling tail, buying tail, and so on. So single TPOs, single boxes stacked on top of each other, minimum 2 boxes count as a tail. Okay, so we got value area, we got range, we got point of control, and we got tail. So far, how many of you are still alive? Type alive in the chat. If it has become too much, let me know. Let me open the chat also. You are alive. Thank God. Thank you so much. So now let's kill this villain, initial balance. It's actually not a villain, it's a beautiful darling. And understanding of this will help you a lot. Before I go into explanation part and assume my role as a teacher again. Okay, how many of you are able to see this pink line behind just to the left of individual profile? Is this pink line, thin pink line, is it visible to all of you? Type yes in the chat. Cool, thank you. This pink line is called initial balance, and it is nothing but first 1 hour high and low. The range of first 1 hour high and low, as you see, A period is the low, B period is the high. It can be reverse also, it doesn't matter. Like here, okay, A period is both high and low. Here, A period is high, B period is low. So it doesn't matter which one is higher, which one is lower. Just the range of first 2 candles, first 30 minutes or A or B period or first 1 hour is the IB. And it is called initial balance. Why it is called initial balance? Because it is commonly assumed that for initial 1 hour, retail participants or local participants, local players, they fight with each other to find a balance of the price. And in pit trading, if I talk about 1985, when pit trading was fairly prevalent, in those periods, the initial euphoria or excitement of early participants was keenly observed by big players, and they used to take the positions accordingly to massacre those early and excited and euphoric local participants. So that initial balance between local players, we used to get established often, and the big players will wait on the sidelines, and then they'll take the position accordingly to massacre or kill all of them. Not, I mean, literally kill them, but yeah, make them lose money. So initial balance is, now it is called a balance for a reason. Initial part you understand because it denotes the activity or range of the first 1 hour of the market open. Now the balance is something you will understand very quickly from this example. In these 3 cylinders, tell me which cylinder is easy to topple. Easy to topple. In Hindi, Ludkana. A, B, or C? Huh? Nice. You are smart people. All of you are smart people. The cylinder C is easy to topple. I won't ask you why. If it's commonly understood, C is easy to topple, then my task is already fulfilled. Now, if you think of it like this, I have just rotated the table vertically, hypothetically, assume there is no gravity. And if the base of cylinder is denoting the IB or range of IB or width of IB, whichever it is called, then you can say that if IB is wide, then the balance is pretty good. Here, the base is wide, it is pretty well balanced. It's not like it's impossible to topple, but it's difficult to topple as compared to other two. This is medium. It is somewhere between these two. C is easiest to topple because it has minimum base area or minimum balance area, or its initial balance with the which is in contact with the table is lowest. And that leads to a very good understanding of this and very important understanding of initial balance, that if base is wide, if balance is wide, if initial balance is wide, then probably big players are not going to do anything else that day, and they are going to play in the range. If it's in the medium, both things are possible. It can be toppled, it can be balanced. And when IB is low, very, very low, then the balance can be broken easily. And when balance is broken easily, what do you think happens? If balance of market participant breaks, if one party takes over, can anyone make a guess what happens? Exactly. Trend day happens. And let me show you. Let me show you. Those of you who could not quite get it, let me show you. Let's say this is the range of price. Okay. Let me draw it here, something like this. Somewhere between could be value area. Somewhere between would be retail participants. Who should be at the top? The big seller. Because big seller is big enough to push the price down. He is keeping the excitement of these retailers under control. And at the bottom, as you guessed it correctly, big buyer will be present. So this is the key characteristic, you can say, of a market dynamics, you can say. Generally, every day, all three of them are present. 70% of the time, all three will be present. And when all three of them are present, market is well balanced. If price goes up, big seller will push the price down. If price goes down, big buyer will buy up and push the price up, and price will continue to oscillate between its extremes. Retailer will keep doing whatever it's best at, jumping here and there and taking a lot of trades, etc., etc. He adds to the flow exchange between big buyer and big seller. Now, for example, on one fine day, this big seller took a leave. His wife did not make him a good breakfast, and so he ate breakfast somewhere and he got diarrhea. So he was not present that day. Now, what do you think will happen to the market that particular day? Anyone? If big seller is not present, what will happen? Yes, someone rightly said, Shiva Suryan rightly said that there will be an imbalance. Uptrend will keep on rising. Trending day, market will go up, goes up, goes up, skews toward buy side. Udega, yes. Uptrend, yes. All of you are correct. If seller is not present, nobody is left to push the price down. And if nobody is left to push the price down, price will rocket to the upside. So now you understand a very important thing, I would say, that these big buyers and big sellers, these are mutually balancing the market. And if one of them disappears, market becomes imbalanced. Right? And this imbalance will topple the market. And market is easy to topple when base is small, when IB is small or low. So please remember that big IB, perfect balance. That means everyone is present. They are not in a mood to take the market in any particular direction. Market is balanced. Here, situation is 50-50. Anything can happen. Here, there's a very good chance that balance will be toppled. Now, it's not absolutely certain that this will happen every time. Okay, it may be possible that seller is selling here and buyer is buying here. And this price is 38,100 for Bank Nifty, and this is 38,000. So whenever price reaches 38,000, buyer will step up. When the price reaches 38,100, seller will step up, and the price will remain in a tight range. And that's what happens a lot when there is a data coming up or big event is coming up, like this day. This is 22nd of November. Look at the range. It's very, very, very tight range. Nobody was interested to do anything that day. So those days also occur. But chances are, if IB is low, chances are that market is going to be trending because it can be easily toppled, and hence imbalance can be created. Now, so far, who is still alive? Type alive in the chat box. Very good, very good. Nice. You are a lovely audience, wonderful audience, best audience I have seen. Now, after jargon, and if you go to any market profile forum, like if you go to our Telegram channel of Quantower, there you will see people, lot of keywords, lot of important words throwing, and you might often get confused, but don't worry. The main jargon that as a beginner you need to understand, I have already shared. Now we jump to type of days. Now that we know that if IB is medium, low or high, and someone asked that how we identify that IB is low or high, you can identify it what's the typical range of the instrument, and we can compare that. Like for example, Bank Nifty. On average, Bank Nifty moves by 1.5% every day. And if IB is like less than 0.5%, then you can say that only 1/3 of the average daily range is in the IB, and that would be regarded as a low IB. If IB is 1.5%, that means whole day's move has already happened in the IB, and that is a big IB. So whenever IB is around 1.5% or higher or close to it, you will see the market will be ranging. So that's how you know. And it, of course, depends from instrument to instrument, but I just gave you an example. Okay, now types of days. There are various types, and I'll make sure that this presentation reaches you. So you don't need to worry about taking notes, just focus here. Though it is called normal day, but it is not normal. it does not appear frequently. So I don't know why they called it normal day, and it's not frequent, but yes, IB is wide. And I just, somebody was asking, how do we know that IB is wide? So for example, Bank Nifty, and for Bank Nifty, 1.5% is the average move. And if IB is around 1.3, 1.4, 1.5, 1.6, 1.7 in that range, then you can say that IB is wide. It's around the almost 70-80% of the day range. So that's how you know that IB is wide, and hence chances are low that imbalance will be created. And when imbalance is created, market becomes trending to the one side. However, this does not absolutely make it certain that imbalance cannot be created. So nothing in the market is like a thumb rule as far as market research is or market understanding is concerned. So wide IB is for on the days of wide IB, basically you can expect sideways movement between the extremes, and you can take your mean reversion or sideways market strategies and you will be profitable. And normal day occurs when generally the OTF participant is other time frame participant, just a fancy name for big player, nothing else. OTF participant is the big player, big seller, big buyer, investment banks, institutions, pension funds, etc., etc. So those are big players. I often refer to them big players only. So if big players, generally they wait for 1 hour. They wait for the initial balance to develop. But if they happen to enter early, then IB gets widened, because there is, if big players are trading, then retailers, they are not capable of holding them back. So market flows into a certain direction until it meets a good seller. So if IB becomes wide, then yes, you are pretty much in for a range bound day. And let me show you an example also. Okay, look at this. This is 30th June. The whole A period and B period. This is starting from 33,195 to 33,687. Okay, 33,700 and 33,200. That's 500 points range in the opening itself. And 500 points divided by 33,000 something. Okay, let's check. Okay, I'm sorry. I was supposed to open calculator. Yes. So 500 points divided by, let me take the average. Yes, please dafa ho jaye. Thank you. I'm going to divide it by 33,000, let's say 500. And into 100, you got 1.49%. That's what I was talking about. 1.5% is the total range. And if in the IB itself, if the market has moved 1.5%, look at what has happened for the rest of the day. It just consolidated, consolidated, consolidated. So that's an example of a normal day. Now there is a normal variation of normal day. It gets funnier. First of all, there's a normal day, which is not normal. And then there is a normal variation of normal day. Okay, so in this case, the IB is slightly less wider. So it is like on the medium, upper, you can say the range of medium. And okay, range extension takes place, OTF counterparty, etc. Okay, something. I don't know what is written here. I don't need to understand what is written here. Let me show you directly in the charts. If you remember that, you remember this diagram. If IB is wide, normal day, range bound day. If IB is medium, then probably the range can be extended. Now, which range is this guy talking about? He is talking about initial balance, because as the day is developing, we will only know the range of the day by the end of the day. When market closes at 3:30, only then we will know that that day has ended and the range is fixed. So this range extension, and considering this is intraday tool of 1985, so they are not talking about days range. Okay, they are talking about the range of initial balance. So the correct term in the book should be the initial balance extension, but by all market participants, market profile participants, it is called range extension. So if IB is lower, not that wide, then range extension takes place. Let me find such example for you. This one. This is what happens. Look at here. Small IB, actually it's not very small IB, and this is 38,100 roughly. This is 38. No, this is a small IB. Okay. This IB is 39,500, 13,300 points. This is also low. Okay, something like this. Actually, it's not a perfect example, but it's like a real world. Nothing is perfect here. 40,850, 40,230, roughly 300 points, 400 points, roughly. So this can be labeled as a medium IB. And on this day, perfectly theoretically, what happens that range extension, the IB extension takes place, and market breaks out of the initial balance. So market gets imbalanced, but soon it finds the counterparty. OTF, big player. Let's say if selling started. So if selling started, let's say this is initial balance, and market was oscillating, suddenly broke out because of the presence of big seller. So IB is medium. It's not very wide. So market breaks out, it can be in balance, but here a big buyer was present and he stops the price here. And then market consolidates, profit booking, etc. And then the day ends or closes somewhere here. So this is the normal variation of the normal day. So range extension, IB extension takes place. Other counterparty of big participant stops the price, and the range extension causes the value to be established lower or higher. Some fancy words. It means simply that the value area, which was supposed to be developed within the IB, it gets developed outside the IB, like here. This is the initial balance. This pink line is the initial balance, but the value area and the POC gets established outside the IB or on the upper half of the IB or overlapping high of the IB, something like that. So the value area gets established outside of the initial balance, something like that. Let's take it forward. Now, trend day standard, it's simple. You remember the example when I asked you guys that if this is retail and here is a big seller, and similarly here is a big buyer, And if seller is not present, then market will just continue to go up and up and up. The market becomes imbalanced, and that's your trend day. And trend day, they are easy to identify because the trend can be caused only by the big players. And when big players enter early in the market, then once they find out that counterparty is not present, let's say buyer entered, and buyer identified that seller is not present, then he will just continue to take the market higher and higher and higher. And that's what happened on this 30th of August, just before Ganesh Chaturthi. Initial balance was not very low or very high. It was somewhere on the lower side of the medium. And then market just relentlessly, without stopping, without retracing, just continued to went higher, 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 higher. And at the end, they just booked some profits and enjoyed the rally. So this is how a typical trend day looks like. These clusters of these boxes will be separated by a single TPO. You will learn this gradually. Once you start observing this regularly in markets, you will identify that, okay, this is what happens. So you don't need to remember anything, don't worry. So the trend days are established when other time frame, other big player counterparty is not present, and buyer or seller enters early. In this case, the example that we just saw, buyer entered early and seller was not present, and retailers cannot stop the big players. So this market kept on going up and up and up, and profile is thinner. So I think that is evident here. Look at any other profile of 2nd of September and look at this profile. It's quite evident that profile is thinner because price could not find balance at any point, and it did not stay much longer at any point. Now there is a special variation, double distribution trend day. Again, small IB and similar characteristics to normal variation. Range extension takes place. New value area is outside of original value area that was forming between IB and the two TPOs. TPOs simply means clusters of those boxes. They are separated by single TPOs and new trading. Okay, something is written. Let me find example of this. Okay, this is an example. Let me find a better one. Actually, here some cluster, here some cluster separated by single TPOs or single boxes. That's your double distribution of trend day. And if you give me a couple of seconds, I'll find a best example. Not best, but yeah, close to perfect example. This also is not. Okay, this one is better. You see, initially, market consolidated in this period, and then it broke out in H period. So A, B, C, D, E, F, G, H. H comes after a long time. It happened during European hours, something like that. And then market broke out suddenly. You see the single TPOs, single boxes, and then consolidate at the high. So this looks like a capital B, double distribution. Though it is written D, but it should be written like this, and it should be rotated. So this becomes a B profile, capital B. But small b is also used by some players, so they call it double distribution. And those blocks, they are separated by a single TPO, just a small characteristic. And this happens when there is a big data or news or any macroeconomic event. Some, let's say, RBI governor is coming to speak something, or our finance minister comes to say something, or Modi decided to, our prime minister decided to say something during market hours. They generally don't do this, but if they do, then yes, volatility or such days are expected. And information will be given away in the first 1 hour itself. IB will be small. And now we arrive finally at the last day. So we have covered normal day and the normal variation of normal day when IB is wide. Then we counted 2 days, 2 variation of days when IB is low. Now, I remember saying that if IB is low, then there is a good chance, high chance, highly probable chance that imbalance will be created. But is it necessary that imbalance will be created? Tell me, type in the comment box, just in yes or no. Is it necessary that if IB is low, imbalance will be created or market will be trending? Type in the comment box, just yes or no. Is it necessary that if IB is low, there will be a trending day? Exactly. It's not necessary. Nothing in this market is necessary. So if IB is very, very low and market is not breaking out of IB, market is not breaking out of the range, then market just consolidates and remains in a very, very, very tight range. And such days are non-trend days, and a very special format of that is called neutral day. And this happens when, let's say this is 38,100. This I was talking about few minutes before. If this is 38,100, this is 38,000. And here is our big seller. And here is our big B, big buyer. So they are fighting between 100 points only. So market remains a very tight range, and that's a neutral day. And it will be evident whenever market tries to approach IB high or IB low, it gets quickly rejected. It will be like whoosh, whoosh, like this. So if the IB is low, yes, you can bet on the range extension. But if range extension, or if market does not get into imbalance, or market does not become trending, or it breaks out but gets quickly reversed, and similarly breaks out and gets quickly reversed, then for the rest of the day, you don't need to deploy any of your trend following strategies. Just short straddle day, simple. Sell somewhere this strike, sell this strike, call and put, and enjoy premium decay. So there is no directional conviction, there is no confidence. They are not even interested to take the market in any direction. And such days, I think I showed you example. Let me show it again. The range is absolutely minimal. Like these days, this day, 22nd of November. The range is hardly how many points? This is 360 and this is 520. 520 to 360. You calculate the range. It's not even 200 points. So yeah, these days occur generally when there is a big event is coming up overnight or next day. So that's what happens this day. So in buyer sellers are very close. They are both active. And if market in this tight range, if market closes at the center, then it is called neutral center day. And if market happens to close at the extreme, then it is called neutral extreme day. That's the nomenclature. So neutral day, market, the range of the day will be very, very small, less than 300 points for Bank Nifty roughly. And 300 points is not a rule. I mean, if Bank Nifty currently is around 40, 41,000, 42,000, if Bank Nifty shoots up to 1 lakh, then this range will widen. So we can talk about it lower half of the percentage. Like if generally if market is like moving 1.5%, then if it moves only half of that 0.7, 0.8% for the day, you can call it a neutral day, something like that. So it's a very, very tight day, and it's a killer day for option buyers. Now for the directional conviction, you might want to take the screenshot of this. All right, I hope you're done. So non-trend day is the lowest day, absolute zero directional conviction or confidence. Normal day, slightly higher. If neutral central day, slightly higher for the next day, basically. If normal variation day, when market breaks out, normal variation of normal day, basically, when market breaks out and consolidates outside IB, then yes, directional conviction is slightly higher. If market is in a very tight range, if it's a neutral day and price closes at any of the extremes, then yes, it's a very good, not very good, but it's a good directional confidence. And double distribution day is a trend day, is an obvious sign of absence of counterparty. So that's an obvious, more than obvious directional confidence. And trend day is obvious. I don't need to say anything further in this. Okay. Now, how many of you are still interested for more? I've been talking for 1 hour, and those who are still energetic, type more in the comment box. Wow. Roshan sir, you must be observing this. This is the wonderful crowd. I've never seen a crowd like this, who after 1 hour of me monotonously talking and giving them something, and they are still interested. So I love you guys. You are a wonderful crowd, the best crowd I've ever seen. And okay, so I'm going to take another 30 minutes, though it will not take more than 30 minutes. So far, before I proceed, let me take few doubts, because I think I've almost covered everything. So that I wanted to cover for today. Okay, how can I decide or choose a stock that gave me long-term gain as Sir Warren Buffett? Okay, we are not in the investment. 2nd December and today. What 2nd December and today? Okay, I did not open the market today. Actually, I don't trade every day. But yes, since you asked about the market, it gives me chance to open this colorful application. I love to open this. I'm in love with this. Okay, 2nd December. 2nd December is here. This looks like a normal day. And this also looks like a normal, close to somewhere between normal day or normal variation day, like that. Okay, please give definition in terms of BNF point or range to be called as small IB. I think Rakesh Umarani ji, I have answered this. Generally 1.5% is the range. If anything less than 0.5% will be low. Anything between 0.5 to, you can say 1.2% will be medium. Anything above 1.2 will be high. It's like that. Especially only for Bank Nifty, because I've done all the research for Bank Nifty only. And how to identify big buyer, big seller? They will make their presence known. Don't worry. And we are taking the baby steps. So you may not get all the answers on the first day itself, but yes, we can identify them. Okay. How to calculate IB? IB, you don't need to calculate, Manoj Yadav ji. IB is visible here in this pink line. So you don't need to calculate. And if you want to calculate, you just take the low. Here it's 43,369. And here it is 43,580 roughly. So from that, you get the IB. Okay, those who joined late, sorry very much. Positional trades. Today, actually, I'm not talking about positional. I'm not talking about how to trade this. I want to cover the basics first so that people will know. Market profile is next. Jitesh ji kya bol rahe hain? Market profile is used for next day analysis rather intraday. Is it the right understanding? Market profile can be used for next day analysis, EOD analysis, which is also called, and for intraday also. And if you happen to show, all of you happen to show the enthusiasm that you have shown today, then probably I'll come here again if Roshan sir will let me, and then we'll have a long journey, and I will explain that, and I'll demonstrate that how to analyze the ongoing markets as well. So bet on it. Could you please let us know approximate percent of if such, Ekansh, I've answered this. How to get raw range, okay? How to identify accumulation distribution in market profile. This part will cover, not today, but yes, we'll cover. Intraday strategies like PPO, CP, reversal strategy. Yeah. Not today, we are not going to talk about any particular specific strategies. Now we have come to strategies section. Now tell me, guys. Okay, let's talk about Bank Nifty because I love it. Volatile, gives enough money to option buyer, option seller, everyone. It's like Mumbai City. सबका कुछ ना कुछ हो जाता है. So Bank Nifty average move is roughly 1.5%. This I have backtested. And if you go to like, if you calculate the total range since the Bank Nifty started, then range goes up to roughly 1.8%. Because on those times, market used to be more volatile. Recently, volatility has come down. Okay, now let's say this is IB. Okay, and range is something like 0.4%. That means it's a low IB. A period market went up, B period market came up to here, C period market closed here. This is the end of C period. Now, each of you tell me, what would you do here at point C? What are your expectations for the market if based on this data? I look for longs on retracement, up, go long. It should go up, breakout trade, sell puts, no trade, to move up, buy, trend day, buy calls, short, okay, and C plus IB minus CY. Okay, some equation is written. I do not understand that. Trend day long, compare with yesterday's IB, okay. Buy common perspective, okay, long on retracement. C minus IB equals to sell, okay, go up, retest, no trade, wait for retracement, etc., etc. Okay, so the answers, few people will jump directly on the long side. Someone will wait for the retracement. They will find their sweet spot and jump on the call side. They will be either buying CE. Okay, here should be you. Buy call or sell puts for intraday only, okay, or buy futures. And those of you who decided to do nothing, that's always a best decision. Deciding not to do anything is also a decision, and I always respect that. When you are not clear, wait it out. So those who said that they will not do anything, they are right. And excitement lovers, yes, they can do this or this. Because now your expectations are that if IB is low and market breaks out of the IB range and closes outside, then chances are high it is going to be a retrace. It is going to be a trending day. And when market is trending, what type of strategies would you apply? Tell me, if market is going to be trending, what type of strategies you are going to apply? Okay, okay. You already answered. You can either buy calls or you can sell puts or you can buy futures. So basically any of the trend following strategy, any of the trend following strategy. On these days, your moving average crossover will give you absolutely fantastic rewards. So those of people who believe, who tell you that moving average crossover does not work, show them a trending day. And by now you have an advantage or edge over others, that how to identify a trending day. So when IB is small, market breaks out, deploy your trend following strategy, moving average crossover, RSI crossover, or breakout strategy may super trend crossover, downchain channel crossover, Bollinger Band crossover, anything you like, or some statistical strategy, anything. Deploy your trend following strategies. Now this part is clear. If you are with me, then type clear in the chat box. Very good. Then let's move forward. Again, our sweetheart, Bank Nifty. And this is IB. And range of IB is 1.8%. This was A period, this was B period. And C period closed here. This is the close of C period. Now tell me, what would you do at this particular point? Type in the chat box. At this point, what are your expectations of the market? If you don't want to type in double, just simply tell me what will be your plan of action. What would you buy or what would you sell? And I'll get the answer. Sell calls, buy puts, sell straddle, strangle, and sleep. Yes, that's also correct. Range bound, mean reversion strategy. Yes. Sell C, buy put on the high. And C plus IB, C minus IB. I have no idea what does that mean. And no trade is always a good decision. Wait, yes. And sell call first, buy call on the low, and buy put. All right, so you get it. Now if I represent plus by going long or minus by shorting, so you are saying that you will short CE or buy PE, buy puts, or you are going to short a future, something like that. Or you can deploy your mean reversion because you believe that market has become overbought, so it should revert back to mean somewhere here. So you can deploy mean reversion. Would anyone here like to deploy trend following strategies for the downside? Let me repeat. Would anyone would like to deploy trend following strategies for the downside here? Yes or no? Uh, 1.8% is the IB range. This is the range of the IB. Scalping trades probably no, never, no. Okay, that can be done. Okay. See, now some of you answered that yes, that can be done. Some of you said that it will not be feasible. So those of you who tried to or thought of shorting here, they are correct. They are 100% correct in their confidence based on the understanding of today's session. Now, Those who want to go short call, buy put, short future, or deploy mean reversion strategy to the sell side, they are correct. Now, those of you who want to deploy trend following strategies for the downside, thinking that IB is large, and if market is rejecting here, it should go to lower IB and you get to enjoy 1.8% of the movement for Bank Nifty. And if you are thinking like that, then probably you might not be successful quite often. Though the potential range for movement is good from top to bottom, but since IB is low, market is not going to be trending. And if market is not going to be trending, that may also mean that if this is IB and market went like this, then this, and its C period closes here, it may just consolidate here. Or it may just go like this and come back up again and then get rejected. So if IB is high, your instinct should tell you that market is the chances of market becoming trending are very, very, very small. And in that case, you should not deploy any of the trend following strategies to be on the safer side. As a trader, our role is always to identify the right market environment, to identify the right strategies. If you can do that, you will make money. And your accuracy will be higher also. There are strategies which will make money. And there are tons of strategies which make money. Then why traders struggle? Because they try to deploy the same strategy in every type of market. Someone found a secret super trend strategy, they will try to apply it in a sideways market. And then they will lose money, and then they will say that strategy does not work. Someone will find RSI overbought, oversold mean reversion strategy. They will deploy it every day and in trending markets. And then they will lose money, and then they will say strategy does not work. So it's not the fault of the strategy. If you can understand what is the expectation of the developing market for the rest of the day, and if you can identify that from the first 1 hour itself, just by looking at the IB, then you already know what type of strategies you should be using, and that adds to your confidence, and that also gives you an understanding what type of strategies should not be used. Any of you, if have questions, let me know. I think I've answered most of the questions. Roshan sir, if any questions you want to highlight, let me know.
One second, I'll have a look.
Yeah.
The Q&A, there are a few questions. I think it's more on the IB side, how exactly to identify the IB, but I think the pink line that you see is already visible. Also, there is a complete details available, so you can check all the details of IB range, high, low, everything within the platform. Maybe you can show your screen at the bottom by putting all the data points. Screen. Can you see this information? You have to simply right click and all these data points are available for you to get a easier understanding. How many POCs, TPOs, value area high, low, all the information that is available. Yeah, thanks, Sanjeev, for such a wonderful session. And we look forward more such sessions from you, especially on the psychology side, which is, I think, very, very important for any trader, because how to control the emotions, how to control the greed, and and the risk management is very, very important. And I think if you can teach on this, I mean, that is something not everybody can teach. And it's good that we have you here, and we look forward to seeing you more here. maybe on different topics, just not just on psychology, but any other topics that you can take care. You can talk to our customers, and we're looking forward for this.
Say no
Thank you
more.
all.
I'm
Thank you all for joining this session. And even though it is already 9 o'clock, you are still there, and it's nice to see you. And as you know, we are conducting webinars on a regular basis. We do not expect you to subscribe to our software always. With a lot of learning that we provide here, and we look forward you joining in more numbers, referring people to our channel, so that more people can learn about the topic that we discuss in webinars. Of course, the motive is to ensure that you use our software in the end. But yes, there are a lot of things that you can use through our software. Our software is almost 70% is free to use. So make use of this to do any kind of trading that you want to do with our partner brokers. Thanks a lot. Thanks, Sanjeev, once again. And thank you all, audience.
Thank you, Roshan. Thank you, everyone. Bye-bye. Have a lovely evening and good night. I'll see you soon.